Dr. Ujit Patel, Dr. Mahapatra, Mr. Kanungo, Mr. Rajesh Kumar, and friends, it's really great to be here and a very exciting time. It was just, 4 or 5 years ago when UPI was just an idea, and we were all looking to see how we can transform payments and develop something which was a native digital internet mobile platform and not take an existing technology and bring it to the internet world. And that's how the idea of UPI was born. NPCI had already done a phenomenal job with IMPS, immediate payment system. And today, as you know, it's one of the great successes of NPCI, which does about 100,000 crore worth of transactions every month. And in fact, Mr. Hota is also here when it happened in his time. And that platform was basically a credit platform. It was, you could send money to a bank account or to somebody's account, but it didn't really have debit facilities. And we felt that to really have something which was completely comprehensive required both debit and credit, and that's how UPI was born. But I think what's important is also the importance of this, because all the key players came together. The Reserve Bank of India was very, very progressive for the last 5 years in supporting UPI in a very calibrated way to make sure there was a balance between innovation and risk. And today we have come to UPI 2.0 as a step-by-step evolution. And I think the Reserve Bank has played a phenomenal role, and I'm grateful to Dr. Patel and his colleagues for that. And I think the fact that India has a company like NPCI is also very, very critical. Without NPCI, we could not have done all these things. And the fact is that NPCI is a non-profit company, Section 25 or Section 8 company, owned by the banks collectively, and therefore having that company which enables these payment rails to be built in a cooperative fashion, in a collaborative fashion, and as an open rail which can be used by everybody, I think is very, very important. In most countries, when you migrate from physical cash to digital cash, you don't get the migration right, because physical cash has always been a sovereign function, right? You have central banks, you have mints, you have people who print cash. It's all run by the sovereign. But digital cash inevitably leads to a privatization of money. And then if that architecture of that privatization doesn't happen properly, you end up creating new monopolies, which is what is happening in some of the countries. And then you become dependent on a few players, and then you have all the consequences of duopolies or monopolies. In India, we have done something very, very strategic, which is that kept the payment rail as an open rail and owned and managed by a non-profit company, which is owned by the banks and regulated by the central bank. I think this is really very, very strategic, because now we have the ability in NPCI to create high volume, low cost payment systems which can be used by everybody. So I think that's one serious strategic policy and regulatory thing that India has done, which every country is now looking at and saying maybe we need to do something similar. The second important thing, I think, is how do you combine reliability and robustness of the banking system with innovation on the edge? And I think the UPI architecture allows you to do that. The fundamental players in the UPI architecture are banks under the Payment and Settlement Act, so they have all the obligations of reliability, security, and so on, counterparty risk and all that. But at the edge of this payment system, we can bring in all innovators, whether it's a Google or a WhatsApp or whatever. So the ability to combine a core sound payment system regulated by the banking system and having all the security and reliability that you want, and have many distribution innovation at the edge, that combination is a very unique thing which only India is able to do. And I think that is going to be a very, very important thing. And this innovation is very important. The third thing is, which is a technological innovation, is that UPI platform that has been built by NPCI is built completely off an open source stack. And I think it's one of the most advanced open source stacks. So it does not, it uses off-the-shelf open source like Linux and so on, Postgres and so on. So the cost of building this technology, of course, they may not like me telling this to you guys because you'll say lower the prices even further. But the cost of building this technology is probably a tenth of what it would have cost us using commercial products. And the architecture of it is designed for scale. So the combination of open source scalable architecture means that the UPI infrastructure is capable of going to billions of transactions at a very low cost. And that is the heart. If you really want to move India from cashless to digital, you need to have high volume, low cost, highly scalable infrastructure. Because if you make your digital infrastructure expensive from a transaction pricing point of view, then there's no incentive for the person dealing with cash to move to digital. And therefore, it's very important that we enable people to go. And I think the use of the internal architecture of UPI using open source has been a critical factor in its success. And we have seen the volumes grow the month before demonetization, as the chairman NPCI said, UPI transactions was 100,000 a month in October of 2016, 1 month before demonetization. Today, it's 250 million transactions a month. So from 100,000 transactions, we have gone to 25 crore transactions in less than 2 years. And with the launch of UPI 2.0 and other innovations coming, I believe that this can reach 1 billion transactions a month within the next 12 months. 1 billion transactions a month is 100 crore transactions a month, which means that over the next couple of years, UPI will become the dominant digital payment system. It will dwarf all other transaction types because of the growth that will happen. And it will actually start moving the needle on cashless transactions, because once your payments become simple, person-to-person payments are simple and effectively free, once your merchant payments are simple, then you'll use this more and more using the cash, using a cashless option. We also should recognize that a lot of the UPI and its other infrastructure happened under the pressure of demonetization, those 60 days from November 8th to March 8th or February 8th, when I think more changes were made in our regulations and in our technology than in the last 20 years, because everybody was focused on what do we need to do to make this work at scale. So, for example, before demonetization, UPI was available only on smartphones, not on feature phones. But in that time of those 60 days, the complete feature phone and USSD app was built for feature phones, so that now people who have smartphones can use UPI on their app, whether it's Yono or any other app. And people who have feature phones can use the USSD. So 600 million people with phones today, whether they have smartphones or feature phones, can now use UPI. And this was a direct result of the demonetization sort of window of policy opportunity. Similarly, the Aadhaar Pay, which allows people who don't have phones to use Aadhaar for withdrawing money or making a merchant payment, also happened at that time. So essentially, what happened was a lot of the policy and regulatory bottlenecks to digital got swept away in those 60 days. And now is the time to leverage all that to really create scale. And I'm confident that we'll create massive scale across the whole thing. So I think this is something which is very important that we have done. This is something which the world is looking at. The whole India's digital infrastructure for financial transactions, the India stack, Aadhaar, eKYC in 2 minutes, UPI, instant payment, is unprecedented anywhere in the world. And I can say we have at least 20 countries which have visited India to see what we are doing and seeing how they can replicate this in their countries. So clearly, what we have is a global phenomenon which has been done thanks to all the people in this room. And it is being seen as something that India has done, and Morocco is implementing it, and Philippines, so on. And every day there's a new country coming who wants to do something about it. So I think we really created something exceptional in this country. And I think the next phase of this is really going to be the data revolution, because historically, when we think of big data, we think of big data as useful to companies to make money or governments to do surveillance or whatever. But India has an opportunity where data can be used by users to get better services. So users can use their own data using the infrastructure we have of authentication online, identity verification, and so on. Users can use their own data, whether it's to get better healthcare, better education, and in your case, to get a loan. And I think the big thing which will happen with all the digital infrastructure we have built is a massive increase in credit, not driven by random decision making, but driven by huge amounts of data. And payment data will be one of those data, because as transactions move from cash to digital, then there's a payment history, and the payment history can be the basis of taking a loan decision. And then as Mr. Rajnish Kumar mentioned, using big data analytics, machine learning, our ability to figure out who is a credit risk will improve dramatically, and therefore ability to give high volume, small value loans, including flow-based lending loans using payment details, is going to increase dramatically. And I think we now are sitting on an opportunity where technology and data will be the key to credit deepening. And in fact, the key to credit revival, because you now have a way to give loans in high volumes to millions of Indians, at the same time making it secure and reliable and risk-free by using data to make sure that the loans are used properly. So I think we are on the verge of that, and I think here again, the central bank, Reserve Bank of India, has done a remarkable job. For example, they are spearheading the account aggregator standards. The account aggregator standards will create a structure. It's very important because if you're really going to get 1 billion people to use the data, you need some intermediaries who will act on your behalf, manage the data connections for you, and make sure that your data is used properly. And the account aggregator standards with the RBI actually allow that to happen. So I think the next part of this digital revolution in India's financial system is the account aggregator, which the Reserve Bank is spearheading on behalf of all the regulators. So once that comes in place, all the 4 or 5 financial regulators will use the same infrastructure. And that will then lay the foundation for credit expansion using data. So I think India has really done an amazing job, and that's thanks to the Reserve Bank, NPCI, and all of you. And UPI 2.0, which they will talk about, I think has very, very significant features. And we still have a few more things to do. And since I have the stage, I'll request the Central Reserve Bank to think about it. We still have to look at recurring mandates. I think it's not yet there, but I'm sure it'll happen one of these days. I'm lobbying for you guys. And of course, the EMI and all that. So I think a couple of things, Mrs. Dave is nodding her head, so clearly she's heard me. So I think, but I think what we have today is very significant. I think the 3 or 4 things being launched today are very significant. And it's important to realize that the way we are doing payments is the opposite of what happened earlier. Earlier, payment, person-to-merchant payments happened in the offline world and then were brought online. Here we have a system which began in the online world and will now go offline. And I think as the big thing will be as millions of merchants are enrolled by all of you with QR codes and so on, as small merchants will start taking payments, then we're going to take payments from online merchants to offline, which is the opposite of the way the card world operated. So I think we are on the verge of some very big things, and I think the credit goes to the Reserve Bank, NPCI, and all of you for this ecosystem. Thank you very much.